Hello friends. In this video I will show you a combination of two moving averages that semi-professional traders frequently use with a buy-sell signal. It is a simple strategy model with a high success rate. During the period I used it, I was able to achieve a success rate of 72 to 86% in a trending market, while in challenging sideways market conditions, the success rate was between 55 to 62%. Now I am showing you how to find the two indicators on TradingView and what settings you need to use. Please follow along carefully. Now that we have optimized our settings, let's look at an example of a long position for our strategy. Yes, we've seen a buy signal. Now we need to wait for the necessary conditions to be met for entering the trade. We don't immediately open a trade when we see this signal. After receiving a buy or sell signal in our strategy, we need to wait for the price to pull back a bit and form a top before making an ideal entry. It is possible to enter the trade from the level where the candle closed after the buy or sell signal appeared, but it is a risk choice for the trader. When a top is formed, we draw a horizontal line from the top of that candle, and we wait for the price to close above that line. If there is a closing, we will open a trade at the closing level of that candle. But if the price cannot cross the line and we see a sell signal, this trade expectation will go to waste. This is a definite rule. Yes, there was a green candle close above our line, and even a buy signal appeared, but we don't pay attention to this signal. We would have opened the trade even if this signal didn't exist. Now, starting from the top of the candle that closed above the line, we open a 1-to-2 risk-reward ratio trade by buying and see the outcome. If the price reaches a 1-to-1 risk-reward ratio, we definitely move our stop-loss level to the entry point of the trade. This is a definite rule. Now let's look at another example of a long position. I would like to remind you of the rules again. First, the blue line of the moving average should be above the black line. Then, we must see a buy signal and we will draw a horizontal line from the peak that will occur after the price retracts a bit. If a green candle closes above that line, we will enter the trade at that level. If we see a sell signal before the price crosses the line, our expectation will be void. Let's look at the development while keeping these in mind. Let's take a look at a short position example now. The basics of our rules are the same here, but we apply them in reverse. The blue moving average line must be below the black line, and then we must see a sell signal. After the sell signal, we expect the price to pull up a bit to make a clear bottom level. We wait for the price to close below the line by drawing a horizontal line from the bottom point. Remember, if we see a buy signal while waiting, our expectation goes to waste. If the conditions are met, we will enter the trade and aim for a 1-to-2 risk-reward ratio. We have seen a new sell signal. Now I assume you have memorized the rules, and I will leave the visualization to flow. Let's take one more look at a short position example and finish the video. I hope you will make lots of profit with this strategy. Please don't forget to like the video, share it, and subscribe to the channel. Until we meet again.